over. It's done. Maybe we have until 2025 till we're like super in it. But the reality is it's already over. It's over. It's over. I don't know how to say it any other way than that. What do you want to do? When is the time to get prepared? Before you need to.
What's up, YouTube? Silver Dragons here, and today I'm so excited to be talking to one of the top precious metals experts on the internet. She is an economist, a stacker, and a prepper. It is Lynette Zang. How are you doing today, Lynette?
I'm doing great and very happy to be here. Thank you for having me.
Absolutely. Now we have a lot of really interesting things to discuss today, but before we do that, can you tell the viewers who maybe don't know you yet a little bit about how you got started in precious metals?
I have been in these markets on some level seriously since I was 10 years old. And it started with my Uncle Al, who was a major antique dealer. Now, keep in mind, we're talking about prior to 1971. And he really was the one that taught me how tangible assets move from undervaluation to fair valuation to overvaluation to fair valuation and under. So it's like a constant movement. And as long as they're good tangibles, they don't go away. You just have to pay attention to how everything is moving. And one day my parents and I were at his house and he goes, "Come on, I want to show you something." And he took us in a back bedroom where he had two tall floor safes. And he opened the doors and he said, "If anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life based on what's in these safes." So I turned around to look, and what I saw, I definitely did not understand the significance of it at the time. I was only 10. But what I saw were two tall floor safes that you could not fit even one more $20 gold Liberty in there. It was stacked like crazy. So he'd go in, totally. He would go into these wealthy homes and they would be like, "Oh, I have these gold coins, blah." He probably paid $35, maybe $50 a coin or what have you. But knowing what I know now, I would guess that he had at least 3,000 ounces between those two safes. I'd say 3 monster boxes in each safe, probably more, but that would be like a minimum.
That's incredible. And we're talking gold, right?
Oh, yes, we are talking gold. And
Wow.
You couldn't fit one more in. And if you remember, it was illegal to own more than 5 ounces of gold in any other form than the way he held them. And that has influenced me. I didn't even realize it till one day I was writing and I said, if you were alive like I was in 1971, and then so many, but that particular lesson from my uncle came, flooding in. I was there in 1971. I remember the energy. I remember the Vietnam War. I remember the issues that we had with oil and civil rights and all of these patterns that when you look back on history are exactly the same every single time there is a currency shift. I was a banker. I started banking when I was 15, studied business finance and stayed in banking. And then until 1986, then I became a stockbroker at Shearson. And that's when I started studying currencies and currency life cycles, because I happened to stumble across what's called non-dollar denominated bonds, which were simply bonds that are issued in different currencies. But if I was going to sell them to clients, then I needed to understand currencies and how currency worked. And it was in that capacity that I came across currency life cycles, because there are repeatable patterns. If you can learn to see these patterns and see when patterns shift, then quite honestly, you can easily determine where we are in this currency's life cycle. I mean, there are lots of currencies that simply do not exist anymore, right? Fiat currencies, government-based currencies. And frankly, ours is going the same way of the dodo bird.
I think it is as well. Now, going back to 1971, when Nixon took the dollar off of the gold standard, what was it like? What were people saying?
Well, there was a lot of inflation. The stock markets imploded about 45%. They dropped pretty significantly. The Vietnam War was going on, and you didn't trust anybody over 30, which, I'm 68. So, but, there was a revolution. There was a revolution that was going on, and it was a monetary revolution. It was a social revolution. It was an economic revolution. And what has the World Economic Forum said, but that we are resetting socially, economically, and financially. So what was happening back in the 70s is similar on many levels to what is happening right now. And can you feel the energy? Can people feel the difference in that? I mean, everybody's just kind of anxious. Like they know that something's wrong. They can't necessarily put their finger on it, but they're anxious about it. Have you noticed that?
Oh, yeah, for sure. It definitely seems like that. People are fearful. I don't know if it's central bank digital currencies coming around, or maybe it's just the inflation that we're seeing. It almost seems like they want more inflation.
That was always the goal. Because in the beginning of this experiment, what did they want? Two key things. I mean, they wanted many things, but two key things. Governments wanted to tax you without having to go through legislation so that you didn't know you were being taxed. And corporations wanted to pay their workers less money. But they knew that if you were used to getting $10, you weren't going to accept 5. But by putting inflation into the fiat money, that those entities could accomplish both of those things, because we have the almost invisible inflation tax. Inflation is not a monetary phenomenon. It is a fiat money phenomenon, because this is based upon debt. And when you have debt, what do you have? You have interest on that debt, don't you? So there's your inflation. This is savings. Because it's real, it's tangible, and it's used in every single sector of the global economy. So it has the broadest base of demand, and therefore the broadest base of buyer. This garbage is used in one place. And we've been taught, in the beginning, what was money? Money was supposed to be a tool of barter. Okay, this mimics that. It was supposed to be a tool of measure so that you could have, the society could specialize. You could have a baker, you could have a farmer, you could have a lawyer, right? And it was supposed to be a short-term store of value so that you were always fairly paid for your labor currently, and a long-term store of value so that you could save that money, and then whenever you needed to use it, you were being fairly paid for your labor whenever you did extend that labor. But over the years, first, the Federal Reserve took those 4 points, those 4 pillars of money, and only gold actually meets all of the criteria to be a good money. Silver is the secondary monetary metal, but only gold meets those criteria. This was designed to imitate it or mimic it.
Right, but it's not working. It continues to get inflated away. What you really need to do to protect yourself is to buy gold. Now, speaking of buying gold, I'm looking at an article here. Central bank gold demand in first half of 2023 was the highest on record. Why are central banks buying up so much gold right now, Lynette? What do they know that we don't know?
What they know is if they want to hold their power and their freedom, they have to hold gold, because whoever holds it retains their choices, retains their power. They want to stay in power. And they know that, and this happens again, 100% of the time. There are over 4,800 fiat money currencies, so government-based currencies that no longer exist. But gold, they always then bring gold as a component of the new money in them. And they will this time because they're going to need to get the public confidence back again. And that is a big part of the problem. This is a con game. It requires confidence. When all confidence is lost, they got to bring back the gold.
Yeah, confidence in the dollar definitely is dwindling, and it looks like they're going to be launching a central bank digital currency in America soon. We know the Fed Now program is already in place, which I believe will be the infrastructure for a CBDC here. What do you think about the Fed Now program?
First of all, what's interesting is they made this announcement to great fanfare, how everyone would have an account at the Federal Reserve through FedNow, and they did that in 2019. Why in the world would they announce that in 2019 and not bring it out until 2023? I mean, I think that's really interesting, but the fact that everybody's got an account, even if you're in a very rural area and you have your bank account at the post office, you have a FedNow account. Now think back to 2020 when they were sending everybody these stimulus checks, and they talked about how much easier would it be to push a button and just have all the stimulus money go into these individual accounts. So much more convenient, so much faster. So yeah, there's not one doubt in my mind, but that the Fed Now is a step in the infrastructure for the U.S. digital dollar, and they will probably keep the name the same because that's what they do. They try and keep things as much like what we're used to as possible so that we don't notice the transition until it's way too late. And when they're trying to make a transition, one of the things, this is another thing that they always do, and we saw it in when they wanted to get people used to the digital currencies. I mean, personally, I do not think it was a coincidence that Bitcoin was launched in January of 2009 and that quantitative easing was launched in March of 2009. And typically what they do to get eyes on it is they allow the public to make lots of money. And a lot of people made a lot of money with these cryptocurrencies, right? And recently, well, maybe about a year ago, the Fed, the IMF, International Monetary Fund, came out with a report that basically said private crypto's bad, government crypto's good. So, but they had to get adoption. And so by the time that they wrote that report, at that time, about 16% of the population had in some form or another dealt with, owned, bought, sold, whatever, some cryptocurrencies. 16% is enough adoption for people to be comfortable enough. And when you read the writings of the International Monetary Fund, the Bank for International Settlements, you read these things, they tell you how exactly they are going to make this shift. And they are going to keep it as close to what we're used to as possible. And they've been moving us in this direction really since the 20s. It was in the 20s when individuals could actually get credit, right? So that definitely helped build to that 1929 stock market crash. And then again in the 50s, that's when they first brought out credit cards so that you didn't have to have any collateral for it. So, they do this slowly so that they get what they want. That's that 2% inflation. I mean, honestly, that's such garbage. I can't even stand it. The 2% is the level where you don't change your behavior. You don't ask for a raise, which is what they define as price stability. You know how they're always saying, our aim is price stability. Well, that's not the price of goods and service. If you hear that, you assume they want the price of this glass to remain the same, stable. No, what they want is they want your wages to remain stable so that inflation can erode them and you don't even know it.
Yeah.
And so you don't change behavior. The Federal Reserve and the IMF has said, once we have a digital currency, and I'll tell you, they've told you how they're going to sell it, right? We're going to have a hyperinflationary event.
Yeah.
And they're going to bring this out and tell everybody, if you let us do these CBDCs and accept this, there will not be any more inflation. Heck no, there'll be deflation. Because officially, there's virtually no purchasing power left in any of this crap. There's no purchasing power left officially. There's 3 cents. So if you get to zero, then what do? You got to attack principle. That's what negative rates are about. They tested it. They didn't get a lot of volunteers, but if everybody is in a CBDC, then they don't care if you volunteer or not. If all your wealth is held there, you have no choices. You have no freedom. So, I have a mantra that I personally live by, and it's being prepared so that if they cut me off, it doesn't bother me at all. I mean, it'll be a little inconvenient. I'm not going to lie. It's going to be different, but I have lots of real money that I'll be able to barter with. I have gardens. I have solar panels and wind. And I have my mantra.
Lynette, one of the most important things that I think people don't realize is how soon all of this could really go down. I mean, once your account is linked to the Fed, it could be too late at that point to get more gold and silver. So you really need to be stacking now. Wouldn't you agree?
100 gazillion%. I've been stacking. I've always had a certain amount, but I've been stacking seriously since 2002. But I've got my bug out location. So I've also executed the rest of that mantra, but it was the gold and the silver that I did first, because that can protect everything else and enable you in any circumstances to more likely be able to buy whatever it is that you need. But when 2008 hit, 100 bazillion%, I knew that the system that we knew died. I absolutely knew it. I was living in a little 2-bedroom condo getting ready to retire, and I just wanted something simple. I could turn the key and off I could travel, do whatever I wanted. And then 2008 happened. And I thought, holy crap. And I knew that the single biggest issue for most people during these transitions and these periods of time was food. So I was not a gardener. I might help my sister every now and again, but that was really not my thing, except that I wanted to make sure that I could feed my family, my children, my siblings, etc. So I bought this property, and I bought it in dead central Phoenix. I am in dead central Phoenix because I knew that my children wouldn't go anywhere. And so I thought, well, this is where I'll make my last stand. And my neighbors were my neighbors were not happy with me for a while because I started digging up the lawn and, planting trees and trying to figure out how to become a gardener, how to become a farmer, how to feed my family. But 2008 was when the system died. So people you're right. They think, well, I'm going to know like 1 second before, and then I'm going to have the time to be prepared. I have been doing the food, water, every energy, all of the rest of that since 2010. And I feel like I am more ready than probably anybody else that I know, but I could be even more ready than that. And people will say, well, how much gold and silver should I have? Well, if you're okay with losing all of this, then you keep it more in this or those products, right? But for me, personally, I'm not a 5%er or a 20%er. I am all flipping in because I lived in that world. I'm a technician. I know how to read the technical language of the markets. I know how to read these reports and understand what they're saying. And so I am all in. I own no other than cash, which I got to have, and I run a business, so there's a certain level that I have to have, but I own no stocks, no bonds, no ETFs, no mutual funds, none of that garbage. None of it. I am all in.
Well, I think that is a great place to be. Now, when we talk about cycles, you said it all started to die in 2008. Where are we now? Is this just the death spiral?
Oh, 100%. Because there is no turning this around. The debt bubble has already been popped. When you know you're going to go bankrupt and you get more credit cards, and that's what's happened since 2008 with all the quantitative easing and all of that. And they talk about quantitative tightening. Well, the banks are now tightening their standards. Because this money system is based on constantly compounding and growing debt. It's not based on paying the debt off. So the fact that the debt bubble has already been popped, that it has already been popped. Yeah, we're at the end. We are 100%. There is not one doubt in my mind. I can't tell you it's going to be Tuesday morning at 8:35, but it could. It's over. It's done. Maybe we have until 2025 till we're like super in it. But the reality is it's already over. It's over. It's over. I don't know how to say it any other way than that. What do you want to do? When is the time to get prepared? Before you need to. I was walking around on my property in 2020 going, oh, isn't this great? Because it didn't hurt me that I couldn't get groceries at the grocery store. I have chickens, so I have eggs. I have plants, I have fruit, I have vegetables, I have nuts, right? I have sugar cane. I was fine, except then there were riots near me at the Capitol and near my children up at Fashion Square. And I thought, aha, hole in my strategy. So that's when I went to a very, very remote location, and it took a while, but I found a bug out house. And up there, it's completely off grid. We've just put in orchards. So, the time to get prepared is now. And I'm not saying nothing's going to happen between now and 2025. I'm thinking that's when we'll be in the worst of it. And that's when the opportunities present as well. Never let a good crisis go to waste. Well, if you're in the right place at the right time with the right asset, guess what? You can take advantage of that.
I do agree with you. I think now is the time to get prepared. And I think there could be some opportunities for those of us holding gold and silver. The dollar, it seems really strong right now, but it's not, is it?
The dollar is strong against other currencies, right?
Exactly.
But in terms of purchasing power, look at my favorite graph. If you said to me you can only work with one, this would be the graph. It's the FRED, F-R-E-D, Federal Reserve Education Department. In the search bar, put purchasing power of the consumer dollar. And you will see how strong, not officially, the dollar is. So we know it's much worse than that. It's hanging on by a thread, but the entire system is hanging on by a thread. So a crisis happening tomorrow morning, it would surprise me because everybody's going to be surprised, but it wouldn't shock me.
Yeah, it absolutely is a good idea to be prepared. Now, if I'm being honest for myself, I am not much of a prepper, but I am a heavy stacker. I've got lots of gold and silver. And you said something earlier. You said you went for the precious metals first because it may allow you some barterability. Can you talk about that a little bit?
Well, absolutely. The gold and silver first for a couple of reasons. Number one, we have been taught that diversification is stocks and bonds and annuities and that kind of garbage. But that's not diversified at all because you can only convert them into this. That's it. So a lot of people have made deposits into 401ks, IRAs, 403bs, those kinds of things. So you need a properly diversified portfolio has tangible wealth as well as intangible wealth. So I needed to make sure at that time I did have some of that. I haven't been all in. I'm an ex-stockbroker. I'm an ex-banker. I get this stuff, right? So while I needed to just properly diversify my portfolio, I needed physical gold and physical silver. But additionally, what I know, because I've studied this since 1987, is that when confidence is lost, we get very, very local, right, for a while before things will then open up again. And so if you even look at Venezuela or in Europe when they were having the debt crisis, people survived by their gold and silver jewelry or their gold and silver coins by using that as barter. Because the thing that, and of course, so few people talk about it, but the reality is again, this is used in every single sector of the global economy. When you are going into a fight, do you want a little baby Swiss Army knife, little itty bitty Swiss Army knife to go into battle with? Or do you want a flippin' bazooka? So you get your ammo in first to make sure that, if it crashed right now, you're stacking, you haven't been accumulating food, but I guarantee you, you cannot live without food, you cannot live without water. You're gonna have limitations, and you're gonna have to be able to barter. Well, people recognize gold and silver because it's in our DNA. Look at our language. Look at the cryptocurrencies. How do they always depict those coins? Gold or silver, either one of those. Why? Because it's in our DNA to understand that people know that this is money. It's been money for 6,000 years. That's why the central banks are buying it, because they know it too. They know this isn't real money. They know this is garbage and that they're destroying it. This is real money. So I built that foundation first, but remember too, I didn't realize until 2008 that the system died. I did not think that I would see this in my lifetime. Boy, was I wrong. So that's why the metals first, because I knew that we were coming to the end. You could see it technically, it was there. And I'm a technician. So when I saw that, I went, okay, time to really start accumulating in earnest. But I really thought it would take a whole lot longer than it's taking. So no, I'll see the end of it.
All right. Well, I have to say, Lynette, this was such a pleasure to be able to talk to you. You're so knowledgeable when it comes to precious metals and the economy and everything else. I will link your YouTube channel here. So if people want to check out your channel, just click the annotation there on the screen. I will also put it down below in the description. Seriously, from the bottom of my heart, thank you so much.
It's been a pleasure. It's been a lot of fun.